Hi folks, Lee Gettess here with the Market Sense for the week of May 15th, 2018. The charts in this presentation are provided to us by Gettess and their Trade Navigator software. And we're looking at the bond market first here. This is a weekly chart of Treasury bond futures. And as you can see, they have actually clipped down below all the lows for a long time here. This is kind of critical to me. I'm a technical analyst. I don't really pay attention to fundamentals, but I just have a real problem with interest rates going a lot higher. I know the Fed says they want to keep raising rates, but it just seems like they'd choke the economy off if they did that. I don't think the economy is quite strong enough to withstand too much here, so I'm a little surprised that bonds are making this shot down here, and I have a hard time believing they'll go lower. Now, there is some really good support down here. I'm going to make it an 11 tick wide band, about 140.22 to 140.11 down here to the lower Keltner and in this vicinity. If they can hold here, they could just make this look like a marginal new low and then just bounce right back up. And they actually don't need to even go down to that lower Keltner. They could just, they've already poked marginally through it. So if they just turn around from here, that's what it'll look like. I'm not predicting that, I'm just saying that seems kind of likely as a possibility to me. We were kind of looking for the 142 area here at this lower moving average to hold just above 142 actually, and that hasn't happened. So it's going to take an awful lot of strength to get them up here to the 143.25 area this week. In fact, that seems rather unlikely at this point. But if they can just hold and turn back up, maybe close back above 142, or maybe just save the turnaround for next week, then I still think there's hope. At this point, breaking the new lows, momentum indicator looking down, I got to say, it takes a lot of faith to say they're going to turn around because they do not look good at all. Stocks, on the other hand, have the potential to look good. Last week closed right near the highs. Now, this is technically not an exhaustion bar because it's to the upside, and markets don't go up and down the same way. Buying is a little more greed-based, and people want to buy more. So they don't exhaust as easy as they do on the sell side when they just say, get me out now and sell everything. But it's possible that this is an exhaustion of buying, and if that's the case, this support, which is right around the 2700 level, shouldn't hold. They should drop down here to, that's 2669, or maybe even down to 2618. You got to remember all of this is taking place within this big sideways zone, so nothing they do in here is terribly critical. However, holding this 27 area after breaking above the previous swing high and everything last week, if they hold this 27 area here, that's how a market would begin to trend strongly. So that should at least kick them up to the 2755 area, somewhere up in here, and might send them up to test further up. But again, huge sideways period here, and unless they take out these highs way back here, doesn't really mean anything. It's still just kind of sideways, but the potential is there for that to be the catalyst, and it'll be fascinating to see if it holds or not. So that's what we've got for you today. I hope you can find something profitable to get yourself involved.